Hello everyone, PS from PS Invest Plays here today. In November, Ford Motors stock closed over $20 for the first time in 20 years. Year to date, it has risen more than 125%. And in March 2020, it was trading around $4. Has the stock peaked? Or can we expect higher stock price in 2021 and beyond? In this video, we will understand its business, its financials, its future growth outlook, and review its chart using Elliott Wave to see how we can make money. So, stick around. I think you'll like what I have in store for you today. Ford Motor, ticker F. Ford Motor Company is an American, multinational automobile manufacturer headquartered in Dearborn, Michigan. It was founded by Henry Ford and incorporated in 1903. The company sells automobiles and commercial vehicles under the Ford brand and luxury cars under its Lincoln luxury brand. Ford is making progress on its plan to transition its lineup from petroleum-fueled or ICE or internal combustion engine cars to electric vehicles, EVs. While early, so far it looks like Ford is doing quite well with its strategy. In Q3 2021 earnings call, Ford said that it will invest $30 billion through 2025 to retool its plants and bring 30 new electric vehicle models to market by that time. Some of these models are already available, like the Mustang Mach-E SUV or hybrid models of the Ford Escape. Other EV models are set to launch in 2022, including the highly anticipated F-150 Lightning, the all-electric version of Ford's top-selling pickup truck. Based on info provided in October, the F-150 Lightning, the Ford Maverick, and the E-Transit have 130,000, 150,000, and 24,000 reservations, indicating strong customer uptake as soon as all-electric models are available. The launch of these models is all but guaranteed to increase the share of Ford's EV sales. In August, 7.1% of Ford's sales came from all-electric or hybrid passenger vehicles, and this percentage should rise significantly as Ford ramps up production and deliveries of electrified vehicles, which include fully electric vehicles and hybrids. With EV versions of highly popular models making their debut in 2022, I think that the share of Ford EV sales should rise from about 7% in August 2021 to 15% by the end of 2022. But Ford is looking far beyond 2022 and wants to electrify 40% of its fleet by 2030. To this end, Ford just announced that it will, together with SK Innovation, invest $11.4 billion into the building of 2 EV mega factories that will also guarantee the car brand's future battery supply. The plants, which will be built in Tennessee and Kentucky, will produce Ford's electric vehicles and advanced lithium-ion batteries, which are essential for powering EVs, starting in 2025. By investing into the domestic production of lithium-ion batteries, Ford is generating long-term supply certainty for its growing lineup of EV vehicles. Last week, Ford also announced that it will, together with global foundries, plans to start manufacturing semiconductor chips locally. It is an excellent move as it would ensure consistent and predictable inventory of key components. As part of its $30 billion electrification plan, Ford also invested $50 million in Redwood Materials, a company that invests in technologies to recycle and remanufacture lithium-ion batteries. Recycling can lower the cost of lithium-ion batteries and the cost of electric vehicles. Bringing battery costs down is key to making EVs more affordable and growing EV adoption in the US. By some estimates, electric vehicles could cost the same as gasoline-powered cars by 2023. On October 27th, Ford released its financial results for Q3 2021. Revenue was down 5% year over year in the quarter, but automotive revenue came in higher than analysts expected at $33.2 billion versus $32.5 billion consensus estimate. With the semiconductor shortage hurting Ford's ability to finish manufacturing cars, it was already expected that revenue would be depressed this quarter. So this result is not necessarily bad news. Ford also beat on the bottom line with adjusted earnings per share or EPS of 51 cents versus the expectation of 27 cents for the quarter. This, plus the fact Ford reinstated its quarterly dividend, likely gave investors confidence in the company after reading the report. Also, Ford raised its guidance on adjusted earnings before interest and taxes from a range of $9 to $10 billion to a range of $10.5 to $11.5 billion for 2021. This is a large jump in guidance, and another reason investors are bullish on Ford stock right now. Plus, it has an equity stake in Rivian. If Ford sells its stake in Rivian, it could give its cash balance a boost, which is important since the transition to electric vehicles will be very expensive. September sales at the automaker surged 34% compared to August, leading analysts to believe Ford may have received a supply of chips that it was able to install. That would have allowed it to move the vehicle to dealer lots where they were quickly bought out. Ford noted it was starting the fourth quarter with 236,000 vehicles in its inventory, 21,000 more vehicles than it did 1 month prior. Although that's dramatically lower than the year-ago figures, it puts Ford well ahead of most of the competition, and it gives at least a temporary competitive advantage of having vehicles in stock that consumers can buy. It has 42 days supply of new inventory, giving it a cushion compared to Hyundai, which has 39 days, Nissan 27 days, Chevy 26 days, and Honda and Toyota both just 17 days. While that's promising, what people are really watching are Ford's EV sales. The automaker said it hit a new record with sales of its entire EV fleet surging 92% in September, compared to a year ago to hit 9,150 vehicles. Equally impressive, sales of the Mustang Mach-E rose 9.2% for the month to 1,578 vehicles. Ford was right to boast that cumulatively it has sold 18,855 Mach-E's to date, putting the EV second only to Tesla's Model Y in full electric SUV sales. Looking at the financials, revenue, gross profit, EBITDA, net income, EPS or earnings per share are improving considerably for Ford. In the chart on the right, free cash flow or FCF currently stands at $2.72 per share. Based on the current price to FCF ratio, the stock is in line with historical averages, so it is not expensive. Because Ford stock trades at some deeply discounted valuations, despite having doubled in price over the past year, it represents an excellent opportunity for investors to buy in ahead of the market realizing that it has mispriced its shares. Ford's stock goes for just 8 times earnings, and because Wall Street expects it to expand those profits at an incredible 72% compound rate annually for the next 5 years, shares are trading for just a small fraction of that growth rate. While that seems a crazy ambitious projection, it suggests that if Ford is just mildly successful in its approach and attains only some of what analysts believe, its valuation has room for significant expansion. This is also indicative in the charts, where I see the stock price to increase considerably in the next 5 to 6 years. Ford has badly underperformed the broader market index in total return for decades. It's been a horrible laggard. But about 3 years ago, it began outperforming the S&P 500, though this year it really has widened the gap. The auto market has changed and Ford is transforming with it, sometimes even leading the way. It's in a competitively advantageous position now and has a head start, at least in certain EV markets. And with Ford reinstating its dividend, it adds juice to the value of buying Ford stock now. Now, let's take a look at the chart for Ford stock. Sorry for the interruption, but I wanted to take a moment to remind you that if you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. With that said, let's get back to our analysis. Looking at the chart for Ford, the bull run that started in 2008 is still not over. It has completed its first 2 waves, and wave 3 is currently in progress. Within this wave 3, after a strong run-up, I expect some sort of a pullback where I see strong resistance around $16.37 and strong support around $12.40. With that said, the bull run is still not over. Wave 3 is typically 161.8% of waves 1 to 2, giving us a short-term price target of $33.35. After this wave is completed, I expect wave 4, which is 23.6% retracement of wave 3, to resume, giving us a short-term price target of $26.37. After this retracement is completed, I expect wave 5 to resume, which is typically 61.8% of waves 1 to 3, giving us a final price target of $46.39, which translates into 142% profit in the next 5 to 6 years. Now, let's summarize. As I said earlier, I expect a small pullback. With that said, even the current price is good for long term. If you see a pullback, then I expect strong resistance around $16.37 and strong support around $12.40. This to me is an excellent buy range, or rather accumulate range. I would recommend, if you buy within this range, hold it for the next 5 to 6 years, as I expect a price target of $46.39, which translates into 142% profit in the next 5 to 6 years. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.